Daily market recap. Dow's down 62 points. Nasdaq 100 had 11-point pullback. The Nasdaq Composite had 9.7, and the overbought S&P level had a pullback of 1507. We were within a point of breaking that all-time high up here, and then we had that hourly distribution, as this is a 60-minute chart, that came right into play. The intraday low that we have in play, just so people are updated in our network, is that the low today on the S&P, that 1546, was part of last week's low over here, uh, last Friday. And you can see how we rallied right back up to the tops. Basically, as I clearly stated on stockmarketfunding.com, is that we had a major overbought market, and overbought markets have to have pullbacks. Here was the latest analysis on 323. Today is 325. You'll be able to see where we talk about some of the monthly charts here on the S&P and the Dow Jones on a monthly level. So we gave our total network, and we also did that S&P 100. That's a very important one. All monthly levels that you need to look at. One of the things that we can say is that the price volatility is increasing. So we're at that 1551 with that 1546 support level on the S&P in an overbought level. The Dow on a 60-minute level, they both all have relatively the same pattern. The high on the Dow today was 14,560. We came down here and tested the lows of 14,395, and we're closing out on a closing level at 1447. Yes, the Dow is overbought. Yes, we're going into a major catalyst earnings. Yes, it's a 4-day trading week. Let's take a look at the Nasdaq Composite, which held up, but all of them have the same similar pattern here, coming down and testing these major critical bull levels, and they're bull levels and they're support levels. They haven't broke yet, and that the volatility will increase. The low on the S&P was 3222.48, and we bounced. And so each one of the indexes found those great support levels in this light trading holiday week. However, from a monthly level, we're still overbought, and a pullback is well deserved and would be healthy for the marketplace. So one of the things that we'll just let everyone know, the Dow Jones, at one point, the Dow was down pretty significantly on that low of 13. The Nasdaq Composite was at its low, and so was that Dow was at its low. And the Dow ranges for the day are roughly fairly tight. I mean, what I can say on the Dow is until we break below 1438, that was on 321 low, where we bounced in this bull run here back up to these major areas across here on the 60-minute chart. What I will say is that there will be some more price volatility within the indexes. We are in an extreme bull run. No one is saying that we're not, but what we are saying from a monthly level, that we're overbought and we're going to have a very light volume trading week. So once again, I'll leave everyone on this note. We'll be watching that S&P, and that intraday low there that we're going to be looking to break would be 1543.55. And today's low was 1546.22 on the hourly bar. Once again, we're still overbought. Once again, it's healthy for markets to pull back so that money off the sideline can find a home in equities in this calendar year. With the major earnings season coming in April, companies are going to have to report. Let us not forget what happened to FedEx And let us not forget what happened to Oracle, two great bellwethers and great companies that missed their earnings. So the U.S. equity market is the place to be compared to all the other markets around the world. And we're holding up much better in the U.S. In fact, this bull is holding up better than other previous bull runs that we've experienced. Just let it be knowing though, from a weekly level and a monthly level, and I'll just show the S&P 500 right here on a weekly level. And we remain overbought on the weekly level. We're at up toward the highs of where these corrections would happen. This is the full calendar weekly level on the S&P, and we're putting in a major top up here. So the best thing to do in our view and what we're doing is we're waiting for pullbacks to put money to work. We'll use the earnings season. It'll be a stock picker's market. There's the weekly S&P 500, and here's your Dow Jones. They all have the same weekly pattern. They've had great runs. This one has had a much higher run than the S&P. We got to last week's reading of about 97% overbought on this index. We will be coming down though, and it will create buy the dip mentality, and individual names that have their corrections from overbought levels would be a great place to look at. Where do I get in and how do I pick them? You can always go to stockmarketfunding.com. We have many programs available that you can get involved in, and we do. And you can start with the SMF Options Exchange and the SMF Stock Exchange. We have our own prints. We can help you make some money. That's what our goal is. We would encourage people that have been out of the markets for a number of years. It's time to get back in. One of the things that we'll be willing to do, as always, is we'll give you trading capital to trade with. And we'll help you with the live entry and the live exit order so you have complete management behind you. You wouldn't have to suffer with pattern day trading rules anymore with the direct access platform. And just go ahead and go through here. We're willing to put up a lot of the capital. We feel that over the last 15-year period that people that have been washed out of markets, it's time for you to return, and it's time for you to get rewarded and get your justice.